What is Forex? The simple explanation nobody gives you. Did you know that every single day more than $7 trillion is traded in the Forex market? Yet despite being the largest financial market in the world, most people have no idea what Forex really is. Many believe it's a quick way to become rich overnight. Others think it's just another form of gambling. The truth is very different. Forex isn't a magic money machine. It's a global marketplace where currencies are bought and sold every second of every day. Understanding how it works is the first step toward becoming an informed trader. In this video, I'm going to explain Forex in the simplest way possible, without confusing jargon or complicated theories. By the end, you'll understand what Forex is, how it works, and why millions of people are interested in learning it. Welcome to the Trading Blueprint. What does Forex mean? Let's start with the basics. The word Forex is short for foreign exchange. It simply means exchanging one country's currency for another. Imagine you're traveling from Nigeria to the United Kingdom. Before you leave, you exchange Nigerian naira for British pounds. That exchange is a Forex transaction. Or suppose an American company buys products from Japan. They need Japanese yen to pay for those products. That is another example of Forex. Every day, people, businesses, banks, governments, and investors exchange currencies for travel, trade, and investment. Together, these activities create the world's largest financial market. Unlike a traditional stock exchange, Forex has no single physical location. It operates electronically through a global network of banks, brokers, and financial institutions. Because countries around the world are in different time zones, the Forex market operates almost 24 hours a day, 5 days a week. Why does currency value change? Now you might be wondering, if money is just money, why do currency prices change? The answer is supply and demand. When many people want to buy a particular currency, its value usually rises. When more people want to sell it, its value usually falls. Many factors can influence this, including economic growth, inflation, interest rates, political events, employment reports, global news. For example, if investors believe a country's economy is getting stronger, they may buy more of that country's currency. Increased demand can push its value higher. Understanding these movements is an important part of Forex trading. Forex is traded in pairs. One of the biggest concepts beginners need to understand is that currencies are always traded in pairs. You never buy just one currency by itself. Instead, you exchange one currency for another. For example, euro to US dollar represents the euro compared with the US dollar. Pound sterling to US dollar represents the British pound compared with the US dollar. US dollar to Japanese yen represents the US dollar compared with the Japanese yen. When you buy a currency pair, you're expecting the first currency to become stronger compared to the second. When you sell a currency pair, you're expecting the first currency to become weaker compared to the second. That's the basic idea behind every Forex trade. Transition. Now that you understand what Forex is and why currencies move, the next question is, who actually trades in this market every day? Is it only professional traders and banks, or can ordinary people participate too? Let's find out. Who trades Forex? Now that you understand what Forex is, let's answer an important question. Who actually trades in the Forex market? Many beginners imagine it's only professional traders sitting in front of dozens of computer screens. While those traders do exist, they're only a small part of the market. The biggest participants are central banks, commercial banks, multinational companies, investment funds, and governments. They exchange currencies every day to support international trade, investments, and economic policies. Then there are retail traders, ordinary people like you and me. Thanks to online trading platforms and brokers, individuals can access the Forex market from almost anywhere with an internet connection. This means you don't need to work for a bank to learn Forex. But you do need education, discipline, and a solid understanding of risk before trading with real money. How does a Forex trade work? Let's imagine a simple example. Suppose the euro to US dollar currency pair is trading at 1.1000. This means 1 euro is worth 1.10 US dollars. After studying the market, you believe the euro will become stronger against the US dollar. You decide to buy the euro to US dollar pair. A few hours later, the price rises to 1.1050. If your analysis was correct, that price movement could result in a profit, depending on your trade size. On the other hand, if the price falls instead of rising, your trade could lose money. This is why successful trading isn't about guessing. It's about making informed decisions based on analysis and managing your risk carefully. What is a Forex broker? You may be wondering, how do I actually place a trade? This is where a Forex broker comes in. A broker is a company that provides access to the Forex market through an online trading platform. Think of a broker as the bridge between you and the global currency market. Using a broker's platform, you can view live prices, analyze charts, and place buy or sell orders. Choosing a reliable, regulated broker is an important step because your trading experience depends on the quality and security of the platform you use. As a beginner, it's wise to start with a demo account. A demo account lets you practice trading with virtual money before risking real funds. Major, minor, and exotic currency pairs. Not all currency pairs are the same. They are generally divided into three categories. Major pairs include the world's most traded currencies, such as euro to US dollar, pound sterling to US dollar, and US dollar to Japanese yen. These pairs usually have high trading volume and lower trading costs. Minor pairs do not include the US dollar but still involve major global currencies, such as euro to pound sterling or euro to Australian dollar. Exotic pairs combine a major currency with the currency of a developing or smaller economy. These pairs often have lower trading volume and can experience larger price swings. Most beginners choose to learn with major pairs because they are generally more liquid and easier to follow. Transition. At this point, you know what Forex is, who trades it, and how trades are placed. But there's one important question left. How do traders actually make money, and why do so many beginners lose theirs? Let's explore that in the next section. How do Forex traders make money? Now let's answer the question almost every beginner asks. How do Forex traders actually make money? The answer is simple. Forex traders try to profit from changes in the price of one currency compared to another. If you believe a currency pair will go up in value, you can open a buy trade, also called a long position. If the price rises and you close your trade at a higher price, you may make a profit. But what if you think the price will fall? In Forex, you can also sell first by opening a short position. If the market moves lower as you expected, you may also make a profit. This ability to potentially profit in both rising and falling markets is one reason many people are attracted to Forex trading. However, remember that if the market moves against your prediction, you can lose money. Every trade carries risk and no strategy wins all the time. Why do most beginners lose money? You've probably seen social media videos showing luxury cars, expensive watches, and people claiming they turned a small amount of money into thousands overnight. The reality is very different. Many beginners lose money because they make the same mistakes over and over again. They trade without learning the basics. They risk too much money on a single trade. They let emotions control their decisions. They chase quick profits instead of building long-term skills. And many believe Forex is a shortcut to becoming rich. The truth is that successful traders treat Forex like a profession. They spend time learning, practicing, reviewing their trades, and improving their discipline. The market rewards patience, not impatience. The most important skill, risk management. If there's one lesson every beginner should remember, it's this. Protect your money before trying to grow it. This is called risk management. Professional traders know that losses are a normal part of trading. Instead of trying to avoid every losing trade, they focus on keeping their losses small. Many experienced traders risk only a small percentage of their trading account on each trade. This way, one bad decision doesn't wipe out weeks or months of progress. Good risk management helps traders stay in the game long enough to continue learning and improving. Forex myths you should ignore. Before we move to the final part, let's clear up a few common myths. Myth number 1. Forex is a guaranteed way to make money. False. There are no guarantees in financial markets. Myth number 2. You need thousands of dollars to start learning. Not true. Many beginners begin by using free educational resources and demo accounts before trading with real money. Myth number 3. The more trades you take, the more money you'll make. Actually, successful traders often wait patiently for high-quality opportunities instead of trading constantly. The goal isn't to trade more. The goal is to trade smarter. Now that you understand how traders make money, and why many lose it, let's finish by discussing the right way to begin your Forex journey. The right way to start learning Forex. If you're serious about learning Forex, you don't need to rush into trading with real money. The smartest traders don't start by chasing profits, they start by building knowledge. Begin by understanding the basics of the market. Learn how currency pairs work, study candlestick charts, and become familiar with concepts like support and resistance, trend direction, and risk management. Next, open a demo trading account. A demo account allows you to practice trading with virtual money in real market conditions. This is one of the best ways to gain experience without risking your savings. As you practice, keep a trading journal. Write down why you entered each trade, what happened, and what you learned. Over time, this habit can help you identify mistakes and improve your decision-making. Remember, every successful trader was once a beginner. The difference is that they stayed committed to learning and improving. How long does it take to learn Forex? One question I hear all the time is, how long does it take to become a profitable Forex trader? The honest answer is, it depends. Everyone learns at a different pace. Some people understand the basics in a few weeks, while developing the discipline and consistency needed for trading can take much longer. The important thing is not to compare yourself to others. Focus on improving a little every day. Learn one new concept, review your charts, practice on your demo account, and be patient with your progress. Forex is a skill, just like learning a language or playing a musical instrument. It takes time, practice, and consistency. Final recap. Let's quickly review what you've learned today. Forex stands for foreign exchange, the global market where currencies are bought and sold. Currencies are always traded in pairs, such as euro to US dollar or pound sterling to US dollar. The value of currencies changes because of supply and demand, economic events, interest rates, political developments, and market sentiment. People from around the world, including banks, governments, businesses, and individual traders, participate in the Forex market every day. Successful traders don't rely on luck. They rely on education, discipline, patience, and strong risk management. And most importantly, Forex is not a get-rich-quick scheme. It's a skill that rewards those who are willing to learn and improve over time. If this video helped you understand Forex better, then you've already taken the first step toward building a strong trading foundation. Here on the Trading Blueprint, our goal is to make Forex education simple, practical, and easy to understand, whether you're a complete beginner or looking to improve your trading knowledge. If you enjoyed this video, don't forget to like, subscribe, and turn on notifications so you never miss a new lesson. In our next video, we'll cover how to read Forex charts for beginners, where you'll learn how traders analyze the market before placing a trade. Thank you for watching, and remember, knowledge builds confidence. Discipline builds consistency. And consistency is what builds successful traders. I'll see you in the next video.